Welcome to Hemlane's Real Estate Management Academy, where we provide quick tips for landlords and managers with rental properties. My name is Jackson Plotnick, and today I'm going to tell you the top 11 things that you need to know about Donald Trump's new tax bill. Before I begin, I want to give a big shout out to Brandon Hall, the CEO at the Real Estate CPA, for taking some of the complex real estate tax laws and actually making it something that you and I can understand. Okay, so Donald Trump signed the GOP tax bill into law on December 22nd, 2017. Here's what it means for you. Number 1, rental income. There's no change to self-employment tax rules. This earlier clause from the House bill was considered a mistake. Rental income is not subject to self-employment taxes. In other words, as a landlord, you are not required to pay an additional 15.3% in taxes on their net rental income. Number 2, pass-through deduction. A new freebie deduction was added, and this new pass-through deduction is truly going to benefit landlords. It is a calculation after AGI, adjusted gross income, and is given to sole proprietors, LLCs, and S-corps generating qualified business income. For partners in a business, the deduction is based on your specific ownership. I don't want you to have to do any math today, so just as a general rule of thumb, rental properties with net income after amortization and depreciation will receive a 20% deduction on net income or a 2.5% deduction on your property's unadjusted basis, which does not include the value of the land. The 20% deduction appears to be on the total rental income of your business, but it is applied on a business-by-business basis. If you want to see the full calculation, head on over to our blog and you'll receive some great content there. Number 3, the DPAD was eliminated. Okay, so many of you are wondering what the heck that is. The DPAD stands for Domestic Production Activity Deduction. It was a deduction that was based on wages paid through ordinary business. Flippers, developers, and builders can no longer take advantage of the DPAD. The good news is that they can counter this elimination with the new pass-through deduction. Number 4, itemized deductions. There's no change on your rentals, so rental property owners can still deduct business expenses from rental properties. This is big time. But if you actually made money in real estate and used that money for primary and secondary residences, itemized deductions will have a greater impact on you. Owners can now deduct mortgage interest on the initial $750,000 of a newly acquired debt. But unless the proceeds are used to purchase or improve rental properties, home equity debt cannot be deducted. A property owner cannot deduct the interest on home equity debt, refinancing, or HELOCs, home equity line of credit. So if you live in a higher income state, California, the limit is most likely to be exceeded as the state and local income and property tax deductions are limited to $10,000 annually. Number 5, property depreciation. While there was a proposal to reduce the useful life of residential and commercial property to 25 years, there's no change to property depreciation in this bill. The useful life of residential rentals is still 27.5 years, and commercial properties is 39 years. Number 6, bonus depreciation. Okay, well, what is bonus depreciation? It is a valuable tax-saving tool for real estate investors. It allows you to take an immediate first-year deduction on the purchase of eligible property. The useful life of a rental property is listed at 27.5 years. As of September 2017, assets with a useful life of less than 20 years will qualify to be 100% expensed through bonus depreciation. Examples within a property include appliances, carpet, computers and software, equipment and tools, and land improvements like landscaping and driveways. While you cannot 100% expense a rental property due to a higher useful life, you can expense these assets within and on the property. Number 7, rehabilitation tax credit. If you develop super old buildings, the 10% credit was eliminated. We're talking about the ones from my Grandpa Jack's era, way before 1936. However, a 20% credit is applied for the development of certified historic structures. Number 8, 1031 exchanges. The 1031 exchange allows real estate investors to exchange a property for a like-kind property without paying taxes right away. The tax is deferred until the last like-kind property is sold. So if you just keep buying, you won't have to pay taxes. Well, for a while at least. The good news is as a real estate investor, you can still leverage the 1031 exchanges. The bad news is that it can only be applied to real property, like land and buildings. Number 9, Section 179. What is it and why do we care? Well, Section 179 allows you to write off the cost of certain property. The total amount that can be expensed has doubled, from $500,000 to $1 million. This means that if you are a commercial rental owner, or even some short-term rental owners, you can take advantage of Section 179 on your non-residential properties for fire systems, security systems, roofs, and HVACs. Number 10, Section 121 Exclusion. Section 121 allows an owner to exclude a certain amount on the capital gains on the sale of a primary residence. This amount is $250,000 for single taxpayers and $500,000 for married filing jointly, with the provision that the owner must live in the residence for the past 2 of 5 years. This means if you're stag and have been at home for the last few years and you keep your capital gains under $250,000, you won't have to pay taxes. The length was proposed to be changed to the past 5 of 8 years, but this proposal did not pass. Number 11, Lifetime Gift Exclusion. The lifetime gift exclusion is the amount of wealth that you can pass on to someone else, tax-free. The change benefits those with large estates, as the lifetime gift exclusion has doubled from $5 million to $10 million per person. Mom and Dad, did you catch that one? If anyone else wants to give something, it's me to you. Thank you for listening. I've also included a link to the Hemlane Academy at the bottom of this video. You can take this link for more quick tips on real estate management. I'll see you next time.